What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is July 28th, 2021. Today is Fed Wednesday. Hope everyone had an awesome trading day. Please go ahead and click the like button on this video and subscribe to my channel if you enjoy this content. I will continue to make it for you. Today we're going to talk about the price action in the headline indices. We're going to also go under the hood and check out our sectors and style factors like we always do. We'll talk about some options order flow. Before we jump into all that, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any single one of my trades. All right, let's jump into the vid. So today was a Fed Wednesday. And Fed Wednesdays and the days leading up, they are always so tricky if you're an active trader. And one thing that I've learned is that when you're in a tricky environment, the best thing about trading is you do not have to play every hand and you do not have to be active on every day. So for me, when I see like, oh, this is going to be a difficult period, essentially every time there's like a binary event, I always just go, hey, I'm not going to really trade on days when there's binary events. So I did take some actions today. But yeah, the past couple of days, I haven't been going too crazy, and that's been working out very well for me. S&P 500 finished down 0.04% as measured by the SPY. NASDAQ QQQ finished up 0.38%. The small caps led us higher today, finished up 1.47%, and the Dow Jones closed down 0.36%. So what we're seeing here is we closed well off the highs on the S&P 500, but we're still trading above that 20-day simple moving average. We're above the 50-day. We're above this monthly value area. So overall, everything is looking positive on the indices. And it looks like we're just going through a little consolidation period. This is about day 3 or 4 of this little consolidation range here. So nothing too crazy today. NASDAQ, very similar. We're trading just above that 20-day simple moving average. After having, this right here is an incredible run. Now it looks like the NASDAQ is getting a little bit more tired. And, that's pretty notable when we look at some of these companies that are reporting earnings. So let's jump to a few of those. So we had Facebook report after the bell. And Facebook is pulling back. It looks like, oh my gosh, it's a huge red candle. But in reality, Facebook just had a really nice run. And whenever stocks move like this, I believe it was, Snapchat reported earnings and Facebook went boom and gapped higher. And this is essentially, it created almost like a power earnings gap setup for Facebook, even though Facebook hadn't even reported their earnings yet. So that's definitely investors jumping the gun. And those investors that were jumping the gun and buying, all the way up here, they are, paying for that today. So Facebook, I believe it's at like 350 and change. Let me see. Okay, we're at 358. So where does that put us in this context? Okay, so 358 is, essentially like right to where we gapped up to. So it's basically just like we erased some of this like froth at the top. We'll have to see how it trades tomorrow. PayPal also reported earnings. And let's see what PayPal did. PayPal was trading right on that 20-day simple moving average. And PayPal also down significantly into the print. So PayPal is trading down at 284. And it seems like, oh my gosh, it's a huge drop. But in reality, it's really not. It's such a small drop. So 284, this thing is just checking back into the top of the monthly value area. So keep in mind, PayPal in the beginning of May was trading down at, in the low 240s. Now it's all the way up at 300. It went up by a good, 20% in 2 months. And now here we are, trading down slightly in the after hours. We had some other names report as well. We had Ford. Let's see what Ford is doing. I believe Ford had a nice report and it's trading higher. Ford is trading up nicely. And it just goes to show, Ford is a name that did not rally into the print, so there was some room to surprise to the upside. Whereas some of these other names, if they're just sprinting into the print, 3 months of just green candles, it's going to be tough to get that surprise, especially if it's a name like Facebook, which is already in every index. Everyone already owns it. Like, you know what I mean? It'd be one thing if it was like some brand new company, but it's not. Yeah, so some of these names are doing very well. Others are kind of flopping. Another one that did very well is Red Rock. I'll be watching this one for tomorrow. Red Rock, you can see, is trading up at about 43.50. That one's looking pretty good also. And let's see what else we got. So Russell led us higher today. And I pointed this out last week, but the Russell has a high amount of shorts in this thing. Pretty much everyone is short and is not really moving down. Like, you'll see we had an epic fall over here, and now we're just kind of consolidating sideways. I actually closed out a Russell hedge that I had on today, and I added a long position in the Russell. Because now it makes even more sense now, because we had some of these mega caps report. Their earnings were kind of weak or lackluster at best. So I could see, hey, maybe some money starts flowing back out of those megas into some of the other areas of the market. So we'll have to see how that goes. But yeah, the Russell tested that 20-day simple moving average and closed below it today. First test of the 20-day in quite a while, though. Yeah, first test since, literally since beginning of July 6th. And then the Dow Jones closed down slightly here, down 0.36%. This thing is just stuck in the mud. It's not doing anything. There's really no reason to, to be honest, go long or short this thing. Let's take a look. We'll go a little bit deeper into our market breadth. Market breadth. So this was a very mixed day. We had a weak breadth for the SPY and for the Dow Jones. For the NASDAQ and the small caps, we had some nice positive breadth. And usually it doesn't work that way, where we have the NASDAQ and the Russell leading on the same day. That's kind of like a unique configuration. But it just goes to show that on this Fed Wednesday, the price action wasn't really following like a central theme. Finviz heat map, we had Google close up after reporting strong earnings yesterday, up 3.18%. We had Amazon essentially flat. Starbucks, which reported, was down. And yeah, you can see it's a very mixed bag. So in terms of like where's my edge and where are the odds the highest, today if you were like picking up longs and doing a lot of trading, it was really just a crapshoot in terms of if you pick something that turned out to be a winner or a loser. And today there was just like a lot of intraday chop. Sectors. Top sector in terms of momentum now is the Block ETF, which is the blockchain fund. And that was up 2.39%. But really, a lot of the weak performers that have low momentum were the best performers for today. So we had the YOLO Cannabis ETF up 5.32%. We had the KWEB ETF up 10%. And the Chinese last night, they essentially like bent the knee. Like, they had an emergency press conference with a bunch of investment banks, and they basically said, like, hey guys, like, we don't want any trouble. We want the market to be stable, blah, blah, blah. So to me, that really put the bottom in these Chinese stocks. You'll see that I did trade a Chinese stock today, and those had, a really nice performance. Then some of the weaker performers on the day were weakest performers, consumer staples, and then we had real estate, which was down 0.48%. Style factors for today. Best performing style factor was cyclicals, high beta, and then we also had a good performance in the momentum ETF. Worst performers were high div, low vol, and defensive. So that to me is kind of risk on. Like, if cyclicals and high beta are the best performers, then high div, low vol, and defensives are the worst performers. That's pretty good. So I'm curious to see if tomorrow and into the weekend we get more flows out of those defensive areas into more risk-on areas of the market, especially because we might have the COVID Delta variant essentially peaking. I've seen some changes from the administration come out, like mandated COVID testing or making sure people are vaccinated if they work a federal job, things like that. I see certain states that are reenacting like mask mandates for certain jobs. So they're doing little updates to make sure that the Delta variant doesn't go out of control, which to me is all we really need to do. I don't really think like the Delta variant's going to be like another shutdown or anything like that. All right, so let's go through some of my trades for today. And here we go. Okay. So stock trades for today. I had taken some TQQQ common shares yesterday. I bought those on the dip. I bought them when the NASDAQ tagged the 20-day simple moving average. I closed those out pretty much right on the open for a nice winner. Closed out for 134, and I had paid 129 and change for that. And then towards the end of the day, I closed out more of my Global E. This name, it just went crazy today. I closed out for 69.61. I had paid 55.55. I said down to my remaining 25% of the position. Stock's now trading at about 60 times sales. So what I have noticed in my observations of the market is in this particular market, 60 times sales is kind of like the upper bound. Like once you hit 60 times sales, like, you know, investors, there's just not really much of an appetite for that name anymore. And Global E, you know, certainly hit that today. So really nice close, up 10% in a single day. So this is pretty awesome. And this had already hit my target. My initial target for this trade was like 65 bucks. So yeah, I was like, I got to take a piece of that off. We'll see. Maybe it just continues to blow off. But what I'm really looking for is, you know, I would rather take a target and then buy some back on the dip. We'll see what happens with his name. Really, really strong name. And then, so I took that one off for a nice winner. And then for some options trading, so I got long Futu this morning via call spreads. And the rationale here, you know, I hear a ton of people, they're saying, you know, I can't get involved with these China names. They could go to zero. So for me, that's the perfect candidate for just using options, like using a call spread, using a naked call, whatever it might be, and just limiting your, you know, limiting yourself where like, okay, if I'm willing to lose this and have it go to zero. Because then it doesn't matter. Like if Futu goes to zero, then I'm like, oh, okay, I just lost the premium I put in. It's not that big of a deal. So I bought the September 17th 130 by 140 call spreads for 280. And I just had size for max loss in case these names continue to flop. And then I added to those a couple of minutes later at 210. And I just saw like I was getting a much better price. So I added a little bit to it. Average cost of $2.58. So the way this trade is structured, if Futu mounts a comeback, then I could make a nice like essentially like 3 or 4 to 1 risk reward on this trade. If Futu doesn't, then I'll lose, you know, my $2.58. Futu had a really nice undercut and reversal setup where we undercut this low and we took out this VPOC down here, and then we reclaimed that level. So that often provides a nice low, nice risk reward entry. And what you'll see is we gapped higher, and we never revisited that gap price once we opened. So that to me is a really good sign. Even though we didn't close on the lows, I'm sure there's a lot of players that are still capitulating out of these and forced sellers. But to me, that's a good thing that we did not even revisit the opening price once we started trading. So we'll see. My target for that call spread, it's up at like 140. And yeah, this is just me taking a shot at this undercut reversal. And then what else here? Oh yeah, I also closed out. I had an IWM hedge on, and that was a calendar spread. I took that one off as well because I think the small caps could actually lead here. And that's really for reasons I mentioned earlier. There's a very high short interest in these names. We have, you know, the Delta variant trade already went on in full swing. And part of that trade was everyone exiting their small caps. If that Delta variant starts to recede a little bit, I think there could be some upward pressure on these small caps. So I closed out my hedge and I added a long position in the small caps. So I added some August 20th, 221 strike calls. So we'll see what happens with those. Real quick, let's check out some options order flow. We'll go over to our matrix. And let's look at our TradeScape. Okay, I see some Alibaba flow. Most of it is puts, though. So that, you know, the sentiment's still very negative for these Chinese names. Pfizer had a good earnings report. And this one is setting up. It should be a nice power earnings gap setup. Let's take a look. PFE, Pfizer. Yeah, this one looks good. So I'll be watching this one for tomorrow to see if this setup can trigger. So this one looks really good. And let's see if we got anything else that's interesting. I think Pfizer is about as interesting as it gets. I don't really see many other companies setting up very nicely. Oh, let's see MicroStrategy. I'm long MicroStrategy. Let's go. We got some calls coming in for MicroStrategy. Let's go, team. Let's get the short squeeze going. Let's see. So these are 2023s, 1250, 1200 strikes. Let's go. I knew this would happen. 690 strikes, 690. This is the ultimate meme stock. Look. Oh my gosh. This thing is going to rip into people's faces, isn't it? Guys, the short float is 27.2%. And it's on the highest performing asset over the last decade. So think about that. They're 27% short on the best performing asset of the last decade. Doesn't necessarily mean it'll be the best performer the next decade, but that to me is a low risk reward play. You're going to short a stock that's tied to the best performing asset of the last decade. I don't get that. But anyway, we'll see. I'm long MicroStrategy. I'm already in the money on my commons, but we'll see. So let's leave it off on that. Let's leave it off on these cryptos that are essentially flat on the session right now. Hope everyone had an awesome trading session, and I will see you all tomorrow.